Chris in Freddie Beach, a.k.a. Fredericton, New Brunswick. Go ahead, please.
It's not a beach, it's 6 foot deep in drift.
Oh, my goodness. Get out there in your bathing suit. Go on, Chris.
Martin Ray International. I've got it in my RIF, so I need a little income and growth. And I managed to pick it up the other day at the bottom, and it's going okay. Your opinion, please, and Andrew, can I have the street on it, please?
No problem.
Thank you very much.
Okay. So, Chris, here's what's happening in the autos. The auto space is battling the view that last year was a peak year for auto sales. You know, it was a wonderful year, and so there's a lot of people who say, well, don't pay for the future because we're clearly going to have a slowdown at some point. Our view is that the consumer is improving around the world, and that it's not probably as bad as people think. However, when we look at a sector, we tend to try to look at the securities that specifically are acting the best.
Okay.
And you know, if I had to pick, you know, a Canadian name, I'd probably pick Magna or Linamar. But the fact is, the group is slowly improving. In a healthy market, as I said earlier, the market should broaden. More and more stocks should participate. Martin Rail looks like it's made the turn here. So I think you're probably okay. If I was entering a new position today, I'd probably be more likely to buy Magna. Which also looks very attractive, you know, with its 2.2% dividend. So I think you're probably going to be okay, but I would prefer to go to the leader first and then work your way back from there.
And you mentioned Linamar, and I should give the viewers a heads up. We hope to have Linda Hasenfratz on pretty shortly because she was at that meeting with Mr. Trump and Mr. Trudeau, also attended by a number of women executives at the White House. So we'll find out her take on NAFTA.
That'll be
and
very
also,
interesting.
what was it like?
Yeah.
What was it like? How much of a circus? So she'll be up hopefully on BNN shortly. Jen in Burlington, go ahead.
Hello, gentlemen. Barrison, I thought I sold at a high, and I live off dividends, and I'm one of those people now looking at buying this stock back at the same price I sold it. As bullish and brave as you are right now, David, is this a buy here, or should I just wait? I'm not urgent to buy it. There's lots out there, like you said, to buy, but yeah. I do like this stock. Thank you.
So, Jen, Veresen was able to do some deals over the last while that should be quite accretive over time, which is attractive. We own some Veresen. So in energy, the majority of our exposure is in a couple of very big services companies and then these infrastructure companies. We own Veresen, we own Pembina, we own IPL. You know, I would add to Veresen here, the stock's behaving well. You know, you're buying it for yield, you're buying it for some of the things that they have coming at them. I'd be comfortable buying the stock here, and we have been buyers very recently.
Now, Veresen, as you may know, wants to build a liquefied natural gas export terminal in Oregon. That got turned down by the energy regulator, but apparently they're trying to work with the Trump administration now to revive that project.
Yeah, I think it's safe to assume that there's likely to be less regulation going forward. So I think there's probably less cap on some of these stocks. And
just got an update from producer Aaron Sobeski, Business Day PM producer. We're expecting Linda Hasenfratz of Linamar on at 3:40 p.m. Eastern Time, and we'll hear from her. What was it like in the, I believe it was the Oval Office,
very interesting.
President Trump and the Prime Minister met with the women executives yesterday. What was the atmosphere like, among other things?
Do you think that he was pandering to the women business executives with our Prime Minister?
Well, he said, as you know, comments came to light during the election campaign.
Yes.
The comments that he had apparently made about women. So he's presumably trying to counter some of that. Anyway, Diane in Kitchener, go ahead, please.
Yes, happy Valentine's Day.
Thank you, Diane.
Happy Valentine's too.
My question is about Coca-Cola. I've had it in my portfolio for a long time, and I'm wondering about the wisdom of continuing to hold it. And I'd appreciate Mr. Burrows' comments. Thank you.
So here's a macro view on things. If you look at the sectors that have started to perform better than the rest of the market in June of last year, and they are transports, industrials, financials, technology, and materials, these are the groups that are positively correlated to rising inflation and rising real interest rates. Okay? They are the most economically sensitive sectors. Earnings have been improving now for the last 3 quarters. First a negative, then 2 positives. So where money is coming from and going to are sectors that benefit in low interest rates and low growth to sectors that benefit in higher growth and a little bit higher inflation. So the consumer staples don't fit that category.
Okay.
Right? So they are being used as a source of funds. And I don't think you're going to get hurt badly in Coca-Cola. I just think you're missing out. Right? So realistically, dividends are outperforming non-dividend paying stocks, but it's dividend growth that is most favored. So you don't want things that act like bonds. You want to own things that are tied to the economy. So I would look for something other than Coca-Cola at this point.
And you have a classic consumer discretionary stock coming
Yes.
up as part of your past picks, or your top picks, I'm sorry.
Yes.
We'll be back with David Burrows. He's Chief Investment Strategist at Barometer Capital Management. He's answering your questions on North American large caps. Give us a call, 1-855-326-6266.